Let's journey back to April 16, 1853, when India's first passenger train set off from Mumbai to Thane, marking the beginning of an incredible railway network. Now, fast forward to today, and we see a vast system that's not only the backbone of our nation's transport, but also a key player in our economy. Now, in the world of the stock market, railway stocks have been on the rise, reflecting the sector's ongoing modernization and expansion. Now, today we are focusing on one stock, IRCTC. From its exclusive ticketing services to catering and tourism, IRCTC plays a pivotal role in the Indian railway ecosystem. Today we'll explore why IRCTC is such an important part of our railways, its various business segments, and how it's poised for future growth. Let's begin. You're watching Informed Investor, an initiative by Equentis. The Indian Railways has come a long way, now ranking as the world's fourth largest railway system, trailing the US, Russia, and China. The Indian Railways has a total track length of 126,366 kilometers with more than 7,300 stations. Now, during the fiscal year 23, a remarkable 5,243 kilometers of track length were added compared to 2,909 kilometers in the previous year. Now, the average daily track length reached an all-time high of 14.4 kilometers per day, marking a significant achievement. Now, every day, the railways operates 13,523 passenger trains and 9,146 freight trains. Now, in recent years, the Indian Railways has also undergone a remarkable transformation marked by innovation and modernization efforts. We've seen the introduction of advanced trains like the Vande Bharat and Tejas, as well as Humsafar. Now, looking ahead, the government has allocated nearly 2.55 lakh crore rupees as capital expenditure for the Indian Railways for the next financial year, reflecting a commitment to further modernization and expansion. In Budget 2024, Finance Minister Nirmala Sitharaman also announced plans to convert 40,000 bogies to Vande Bharat standard aimed at improving safety and convenience for passengers. Now, though the Indian Railways have significantly advanced, we do face several challenges, but we will leave that for another episode. Now, coming to the railway stocks. The Indian railway stocks have been in the fast lane, leaving investors breathless in the recent months. Moreover, after the re-election of the NDA government and the previous railway minister Ashwini Vaishnav taking charge for his second term, these railway stocks have witnessed a surge. Now, if you see the chart on your screen, all railway stocks witnessed an impressive surge over the following time frames. If you look at the 1 month performance, RVNL backed the highest with 53% returns, while IRCTC witnessed 3% returns. Now, what's impressive is the triple-digit returns most of the stocks have witnessed over the past 1 year. IRFC leads the race with an impressive 437% returns, while IRCTC again amassed 58% returns. Now, broadly speaking, the increase in passenger traffic, the significant boost to railway budgetary allocation, ambitious plans for dedicated freight corridors, and modernization initiatives like the Vande Bharat trains are significant factors propelling the growth of railway stocks. Now, as we discussed, the Indian railway network is vast and plays a crucial role for our economy. Upgrading and expanding this network presents a long-term opportunities for railway stocks involved in construction, manufacturing, and other related services. But today, we will delve into one specific stock that does make quite the noise on the Lal Street, which is IRCTC. IRCTC was incorporated on September 27, 1999. Now, it is a central public sector enterprise under the Ministry of Railways, and the Government of India holds a substantial 67.4% stake in IRCTC. What makes IRCTC stand out is its unique and exclusive role within the Indian railway system. It is the only entity authorized to provide essential services such as catering on trains and at station and managing the entire online ticket reservation system for passengers. Now, this exclusive authority creates what we call a moat in business terms, as Warren Buffett very famously calls it. Now, a moat can act as a competitive barrier that shields a company from rivals. Now, in IRCTC's case, this moat is significant because it prevents any other entity from directly competing in catering, ticket booking, or even water supply for Indian Railways. For passengers of Indian Railways, just as iPhone users are bound to iOS, booking tickets through IRCTC is mandatory since there are no alternative authorized platform for reserving seats. Now, this protection is pivotal for IRCTC's dominance and sustainability in the market. Now, this monopoly also brings several advantages to IRCTC. Now, any expansion in the e-ticketing market directly benefits IRCTC as it remains the exclusive provider of this service. Now, unlike companies in competitive market that must continuously enhance customer experience, IRCTC faces less urgency to upgrade its services regularly. Now, this advantage enables IRCTCs to maintain efficient operations and low costs. Now, the financial impact of this monopoly does significantly boost IRCTC's profitability. Now, coming to the company's business segment. IRCTC generates its revenue through a variety of channels thanks to its exclusive rights in the railway sector. Now, let me walk you through the main ways IRCTC earns money. Now, one of IRCTC's major source of their revenue comes from their online ticketing platform. Now, when you book train tickets through their website or mobile app, they charge a convenience fee. Now, this fee depends on the class of travel and the type of ticket you're booking. Now, it's usually a small amount like rupees 15 to 30 per ticket. Now, despite being small individually, this fee adds up fast because IRCTC handles millions of transactions every day. And in this fiscal year, IRCTC achieved a daily ticket booking of 12.38 lakh tickets per day as compared to 11.82 lakhs tickets per day last year. Now, internet ticketing contributes about 30% of IRCTC's total revenues, and more importantly, it makes up around 77% of their total operating profit. Now, this shows how crucial online ticketing is for their financial performance. Now, the online ticketing sector is growing rapidly due to the increasing popularity of online marketplaces, offering convenience and cost effectiveness. Now, IRCTC management also said that the Indian Railways is planning to get rid of waitlisted tickets within the next 3 to 5 years. This means that everyone will be able to book a confirmed ticket without having to wait and see if a seat becomes available. Now, to get rid of waitlisted tickets, Indian Railways is also making big investments to expand our railways. Now, another major development is the creation of dedicated freight corridors. Now, these are special tracks that will be used only for goods trains. Now, by moving goods trains to their own track, the regular tracks will be less crowded. This would open up more space for more passenger trains and make the system run more smoothly. Now, IRCTC also plays a vital role in providing catering services across India's vast railway network. Now, they operate both on-board trains and at railway stations. IRCTC collaborates with private caterers who operate under their guidelines. Additionally, it has also ventured into e-catering services, allowing passengers to order meals from a wide range of restaurants. And on these orders, IRCTC earns a commission. Now, with a vast operational footprint, IRCTC manages over 470 catering chains and services more than 700 trains daily. Now, their partnership with food aggregators like Zomato facilitates over 1 lakh bookings daily across 407 stations, showcasing their extensive reach. Now, the catering business is a cornerstone of IRCTC's revenue, contributing a substantial 45% to their total income. Moreover, it accounts for about 20% of their total operating profit. Now, looking ahead, IRCTC's catering division remains promising. Long-term contracts, a thriving e-catering segment, and ongoing efforts to upgrade station facilities all point to continued growth. Now, IRCTC's Rail Neer is another part of their business, providing packaged drinking water to passengers on trains and at railway stations. Now, they sell these bottles at competitive prices, usually between 15 rupees and 20 rupees each. They also supply Rail Neer to institutions, expanding their market beyond just train passengers. Now, Rail Neer contributes about 8% to its total revenues, but only 2% to its operating profits. Now, recently, their production has also increased from 12 lakh bottles per day in the previous financial year to about 14.5 lakh bottles per day now, showing how their operations are growing. Now, the bottled water market in India was valued at $22.7 billion in 2022 and is expected to grow to about $36.2 billion by 2030. Now, this is according to Graveview research. Now, this growth is driven by factors like health consciousness after COVID-19, more disposable income, concerns about hygiene, easier access to bottled water, and issues with the availability of safe drinking water. Now, with growing production capacity and a favorable market outlook, it offers a strong opportunity for bottled water like Rail Neer within the Indian railway system. Now, IRCTC is not just about train tickets and catering, they're also big on tourism. They offer various tour packages and cater to different interests, including rail tours, pilgrimage tours, and broader sightseeing trips. Now, tourism is another part of IRCTC's business, contributing about 16% of their total revenues. Now, looking at the bigger picture, the travel and tourism sector in India is expected to grow by 7.8% annually over the next decade. Now, this growth means more people will be likely traveling for leisure, and IRCTC can take advantage of this trend with diverse and attractive tour packages. Now, coming to Q4 fiscal year 24 results. Now, IRCTC's revenue in the fourth quarter increased by nearly 20% year over year, mainly due to strong performance in the catering and tourism sectors. However, the operating margin, which is also called the EBIT margin, dropped to 31%, even with steady revenue growth. Now, this drop was caused by higher catering costs, administrative expenses, and some one-time charges. The margin in the internet ticketing business also declined sequentially due to the improving share of UPI payment, where the convenience fee for the company is lower. Now, looking ahead, IRCTC has plans to grow in various ways in fiscal year 25 and beyond. In fiscal year 24, most of the company's revenue came from catering, but they're also now focusing on expanding into new opportunities. Now, while ticketing is expected to grow slowly, IRCTC sees major potential in less developed areas such as packaged drinking water and tourism products. Now, this change in focus might impact their overall profitability initially, but by capturing a larger share of the travel market, IRCTC is optimistic about achieving long-term growth. Now, coming to what you need to know before investing in IRCTC and the railway sector. Now, number one is policy and regulatory shifts. The railway sector is heavily affected by government policies and changes, which can impact the performance significantly. For example, on October 28, 2021, the Railway Ministry ordered IRCTC to share half of the convenience fee it collects from passengers. Now, this led to IRCTC's largest market drop since its debut in 2019. Now, this isn't the first time such a change occurred. In 2014, the government took 20% of the convenience fee from IRCTC and increased it to 50% in 2015. They stopped taking the share in 2017 and proposed it again. After facing criticism, the government then withdrew the demand for sharing the convenience fee. So, keeping an eye on such policy flip-flops is an absolute must. Now, the demand for railway service is closely linked to the overall economy. For example, the COVID-19 pandemic severely impacted IRCTC's operation, causing a 66% drop in revenue during the pandemic year. Now, despite these challenges, IRCTC has shown recovery and growth post-pandemic. Now, IRCTC holds a monopoly status in India with exclusive control over railway services such as ticketing, catering, and tourism. Now, it's the only entity authorized by Indian Railways to offer online railway tickets, run catering services, sell bottled water across all railway stations and trains. Now, the strong market position, solid financial performance, and minimal debt makes IRCTC a dominant player unless its monopoly is challenged. Typically, the September quarter is the weakest, followed by the March quarter, while the June and December quarters are the strongest. Now, IRCTC also faces growing competition from road and air transport, which can affect its market share and pricing power. Now, cheap airfares in particular can also draw customers away from rail travel, pressuring railway stocks. Now, these are the key things that one needs to watch out for in the railway sector. Now, despite positives such as the growth in the railway sector, the opportunities, and the management plans for future growth, it is important to keep an eye on valuations to make sure that the stock remains attractive investment. And it's also important to note that this video is for educational purposes only and does not constitute investment advice. Having said that, this is me, Malsana, signing off. Take care and stay invested.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.